All right, guys, now that we are done with rewiring our brain, learning the candlestick anatomy, we are going to be moving on to highs and lows and trends in today's lesson. So let's jump over to the charts and see exactly what they are and what they mean. So right here, highs, lows, and trends, we're going to be covering. I'm going to be drawing out here on my right to kind of make sense of it for you when the market is in an uptrend, okay? Because the market only moves in three directions. You have an uptrend, you have a downtrend, and then you have a range, which is a sideways trend. All right. So we're going to be kind of breaking that down together, showing exactly what they all mean, how to decipher which one of them we are in, and how to read the markets, because again, only moves in three ways. So if we can understand all three of these ways, we're going to understand how the market moves, where it is currently at, and how to read it on the day-to-day. So when the market is in an uptrend, that is one of the ways the market moves, price keeps pushing to new highs, then pulling back, but not all the way, because if it pulls all the way back, that isn't an uptrend. An uptrend is each new peak is a higher high, each new pullback is a higher low. So what that is saying here is if we're in an uptrend, we're constantly getting higher highs and higher lows. So this is what they mean. Every single high is higher than the previous one. So this high, this high, this high, they're constantly higher than the previous one. Same thing with the lows. So if we're in an uptrend, the highs and the lows are each getting higher than the previous one. So the lows, each low is higher than the previous low. So that is how we know we are in an uptrend. It is stair-stepping its way up. Each high is higher than the most recent one, and each low is higher than the most recent one. So it's pretty easy to understand. You have all of these moving upwards. Now, you might be asking me at this specific time is, well, how do you determine what a high is and what a low is? Well, there is a pretty easy way. A high is going to be a green candle up and a red candle down. That is a high. And then a low is going to be a red candle down and a green candle up. That is a low. So it's just opposite. So you have a green candle, red candle, that would be a high. You have a red candle, green candle, that would be a low. So each one of these right here would be a green candle, red candle, green candle, green candle, red candle. And that is how you determine highs and lows when you are marking out an uptrend, downtrend, or a range. So now that we know what an uptrend is, we can move over to a bearish trend. It is a downward trend. This is the exact opposite of an upwards trend. All right, the sellers are more in control. So each new drop creates a lower low. Each bounce upwards fails to break the last high, creating a lower high. So we're getting lower highs and lower lows in a downtrend. So that's what this would look like right here. Each high is lower than the previous one, and each low is lower than the previous one. So it's just opposite. We're actually stair-stepping downwards now in a downward trend. Because again, each low is lower than the previous one that you can see. And then each high is also lower than the most previous one. So that is how you know we are in a downtrend. Now, a sideways market is just what you would expect it to be. We're not going up, we're not going down. We are just chopping around in the same area of price, not breaking higher or not breaking lower throughout that crappy market. All right, that's not something we want to trade in because the market isn't doing anything. It is a barcode, often what you see at the supermarket or out shopping. It's literally just barcoding. That's what I like to call it. It's moving sideways, looking like a barcode. Now that we know the three ways the market can move, we now have to talk about spotting trend shifts. Because obviously in a perfect world, we would just be in a constant trend in the same direction all the way up and we would all be millionaires. But unfortunately, that's not how it works. So we have to be able to find how to spot a trend break. So in a trend break, trends don't last forever. This is how we spot them. In an uptrend, if price fails to make a new higher high and instead breaks below the last higher low, the trend may be flipping to the bearish side or a range. It's showing that this trend has been broken and that the market is looking to make a new trend, either downwards, sideways, or continuing back up. So once we get this break, we can often expect the market to be making a new trend or creating a new trend. And here's what it looks like. All right. So in an uptrend, again, we're getting higher highs and higher lows. But what happens if we break below this most recent swing low. Well, that would be a trend break because our structure, we're breaking that structure that we're building, because remember, the structure is higher highs and higher lows. Each one of those are protected. So once we break one of these lows that we created, and now it's building a lower low than the previous one, that is breaking the current structure that we're building to know that we are in an uptrend. So that's going to tell us that the trend is wanting to make a new trend. Okay, the market is looking to make a new trend. The whole structure is shifting. And then to a downwards, we can now make a downward one. In a downtrend, if price fails to make a new lower low and breaks above the last lower high, the trend may be flipping to bullish. Now, here's exactly what that would look like. So we have our normal downtrend getting lower lows and lower highs. And then what happens if we break above one of these lower highs? Because again, how we know we're in a downtrend is the structure. So the structure, we're getting lower lows. Every single low is lower than the previous one. And then the highs are lower than the previous one. So if we break above one of those highs, we are changing structure, showing that the market wants to build a new trend. Okay, it's pretty straightforward, pretty making sense. If you guys have any questions on this, don't hesitate to reach out, but also rewatch the video to see if you can pick up on something that you missed the first time through. It's important to understand what a candlestick is and also how to identify highs and lows. And on top of that, how to learn if we are in an uptrend, downtrend, or range. So what we're going to do is we're going to go over to the charts here now, and I'm going to show you guys what I mean by this. Okay, so we're going to go to a higher time frame here. How do we know if we are in an uptrend or downtrend? We stair step, right? It's a stair step up. And then how do we know what a high and low is? A low is a red candle, green candle. So let's go out and mark out everything that we can see here. So as you can see right here, we got a move up and a move down. Right here is a high. We have a move down and a move up. Right here is a low. We have a move up, move down. Right here's a high. And then we have a move down, move up. Right here is a low. And then right here is a high because we have a move up, move down. Oh, this low came really close to taking this low, but it didn't. It just missed it. So we have a low here, and then we have a high here, and then we have a low here, and then we have a high here. But uh-oh, this is the next low, breaking this most recent swing low. We knew we were in an uptrend because each high is getting higher every time, and then each low is also getting higher each time until we get to right here. This high is higher than this high. All right, we're still good. But then this low right here that I'm circling, and this might look like chicken scratch, is lower. It's lower than this most recent swing low. We are getting a change in the structure, okay? Now let me delete all this, kind of break it down on a clean chart here. We're in an uptrend. We're getting higher highs, higher lows. Right here is the most recent swing low that we can see. And then this move down right here breaks the structure. We get a candle to close under here. So we can see that this took this most recent swing low, telling us that the market is often wanting to create a new trend, which we can see right here. So you can see we are now in a downtrend. So it wanted to create a new trend out of this uptrend once we broke the structure right here. That is the break of the structure that we are in an uptrend. Okay, pretty straight, pretty to the point. Hopefully you guys can understand this. If not, please rewatch this video, and then we are ready to move on to lesson number 4. See you guys there.